Do you believe that one of the hottest stocks right now is Tesla stock? If so, which other stocks do you think billionaire Ron Barron thinks are worth investing in? It would be wise for you to attend this one as Barron is well known for his extensive investment experience. According to Elon Musk, those with long-termism, an optimistic outlook, and a long-term perspective are the ones most likely to succeed. And what you really need is people who have infinite time horizons. Ron Barron continues, not tomorrow, not next quarter, infinite time horizons. Ronald American mutual fund manager and investor Stephen Barron, better known by his stage name Ron Barron, founded Barron Capital, an asset management company that specializes in providing growth equity investing solutions. With 52 years of research experience, Ron formed Barron Capital in 1982. Barron Growth, the $10 billion flagship fund of the buy and hold investor, with an annual turnover of less than 3%. Ron Barron now has a $4.2 billion net worth. In the midst of the market's recovery from June's lows, Barron Capital CEO Ron Barron recently appeared on CNBC's Squawk Box to discuss possible investing options. Barron stated to CNBC in the interview that we're investing in growth companies, so the growth companies are a hedge against inflation. In the aforementioned interview, Barron disclosed the companies they regularly purchase, naming Figs, Dub, the Lululemon of healthcare, SpaceX, Tesla, and Tesla. Ron Barron still owned almost half of Barron Partners in Tesla as of early August. However, the fund's longer-term track record is strong with or without its Tesla holding. On April 30th, 2003, Barron Partners, which had started out as a private partnership, changed its status to public mutual fund. The fund generated an astounding 17.93% annualized return from that point to the end of July 2022. In comparison, the S&P 500 returned 10.3% and the Russell 1000 Growth Index returned 11.6%. In the pre-Tesla and post-Tesla eras, the fund comfortably outperformed the index. In the first quarter of 2014, Barron made his first Tesla purchase. The Russell 1000 Growth Index produced an annualized return of 14.46% from its creation through the end of 2013, but the fund produced an annualized return of 21.9% through July 2022 from the beginning of that year. But the fund's 14.78% annualized return also comfortably beat the 9.34% annualized return of the Russell 1000 Growth Index when it did not own any Tesla. Prior to Tesla's initial appearance in the fund, its top assets included Hyatt Hotels, energy infrastructure company ITC Assets, and specialty insurer Arch Capital. In addition, the fund had two private holdings, Windy City Investment Holdings, and the private equity firm Carlyle Group, as well as Charles Schwab, FactSet Research, and Vail Resorts. Charles Schwab and Arch Capital are the two equities that the fund still holds since its initial public offering. Since the fund's founding to the end of July, those stocks have returned 12.95% and 13.53%, respectively, on an annualized basis. Additionally, from the first quarter of 2008, the fund has owned Vail. Vail has returned 12.28% on an annualized basis since the beginning of that year through July 2022, outpacing the returns of the S&P 500 and the Russell 1000 Growth Index, which are 11.36% and 9.37%. respectively. Prior to purchasing Tesla, which quickly rose to become Barron Partners' top stake, the fund's highest holding on December 31st, 2013, was a 10.002% allocation to Arch Capital. The fund, which usually owns 30 stocks, has previously had double-digit positions. For instance, ChoicePoint had an allocation of 18.57% at the end of 2013, and Vail Resorts had 14.91%, but none of these amounts has come close to Tesla's present allotment. According to Ron Barron, Tesla should be able to build 20 million vehicles within 10 years. The company currently produces about 1 million automobiles, while the top two automakers in terms of delivered cars, Volkswagen and Toyota, jointly produced less than 20 million cars in 2021. For Barron and Tesla, that's it, but the story doesn't end there. Barron has high hopes for SpaceX, another business under Elon Musk's leadership. Billionaire Ron Barron recently put $100 million into SpaceX in late August, and he believes that in the next 10 years, his Tesla holdings will increase 3 to 5 times. According to CNBC, the founder and CEO of investment management company Barron Capital also invested roughly $100 million in Figs, dubbed the Lululemon of the healthcare industry. His largest recent actions have been to invest in SpaceX and Figs, a company that makes hospital scrubs. You mentioned that Barron. He had taken involved in earlier fundraising campaigns for SpaceX. In the meantime, SpaceX and T-Mobile recently revealed a collaborative venture on Twitter with the goal of boosting connection. In addition, Barron disclosed that he has purchased shares in Red Rock Resorts, Vail Resorts, and Hyatt, demonstrating his optimism over the travel industry. A well-known Tesla supporter, he calculated that after making his original $380 million investment in 2014, he has gained between $6 and $7 billion in shares of the EV manufacturer. In the next 10 years, he continued, he expects his fund to make 3 to 5 times its initial investment in Tesla. In the next 10 years, I think that Tesla is going to be the largest company in the world, and in the 10 years after that, I think it will be challenged by SpaceX, he stated. In general, Ron Barron has been investing in equities of Elon Musk's Tesla, SpaceX, which produces hospital scrubs called FIGS, and vacation companies Hyatt, Vail Resorts, and Red Rock Resorts. A few months ago, during an interview, Barron was questioned about his criteria, as he is a master of growth investment, which entails, among other things, identifying businesses with the potential for above-average profit growth. Everyone can comprehend what a growth firm is, he claimed, but most people find it difficult to grasp competitive advantage, which is what matters most. There is no algorithm that can determine that. You have to know how a business functions and what makes it hard for competitors to compete, advises Barron. Barron gave Tesla as an illustration. He claimed that Tesla's culture of quick innovation gives it a competitive edge. The 10-year lead time on batteries and electric vehicles is held by Tesla. An entire industry has been changed by it, instead of basing our investment decisions on a company's current value, we consider its potential growth over the next 5 or 10 years. We have aimed to increase our funds by double every 5 or 6 years. We have achieved this by making long-term investments in companies that we think have a competitive advantage and are run by remarkable individuals. Our concerns are with businesses, not with stocks and stock exchanges. When asked if he ever hangs on to stocks that underperform for a few years, Barron responded in the affirmative. He clarified, saying that's frequently the case. Tesla is one instance. He disclosed that from 2014 to 2016, his company spent $380 million on Tesla. Less than 2% of their company's assets were invested in the stock at the time, he said, despite their belief that they could make 20 times their money over a 10-year period. He said that the highly regulated, capital-intensive nature of the auto industry made it risky, and that few people believed Elon Musk's electric car company would succeed due to the opposition of powerful, well-funded automakers, their dealers' unions, hedge funds, and politicians. Over the next 5 or 6 years, Tesla saw a tenfold growth in sales. Despite being highly volatile, its share price did not fluctuate much throughout the majority of that time. We were correct, and Tesla's sales have kept rising sharply. With a 20-fold gain in Tesla's share price between 2019 and 2021, we made nearly $7 billion on our original investment. Over the following 10 years, we anticipate it will generate at least 3 to 5 times our income again, Barron stated. Barron Capital CEO Ron Barron stated that he intends to retain Tesla stock for a minimum of 8 more years during a CNBC Squawk Box episode. I think we're going to make 3, 4, 5 times our money on Tesla from here, Barron stated. According to the aforementioned interview, billionaire investor Ron Barron anticipates that the shares of Tesla will continue to soar for the next 10 years. His fund has already made $6 billion on its initial investment in the company. According to Barron, he put $380 million into Tesla between 2014 and 2016 at an average price of approximately $40 per share. As a result, he has made about 20 times, or roughly $6 billion, on his investment. To diversify the portfolio, Barron has sold almost $1 billion worth of stock in the 2 mutual funds that own it. Currently, Tesla represents around 2.8% of the assets managed by the firm. He continued, I think for Tesla, this is the very beginning of what they're doing. Indeed, the billionaire investor predicted in a 2018 interview with CNBC that the manufacturer of electric cars may generate $1 trillion in sales by 2030. If you want to see more videos like this one about the financial business, be sure to subscribe to this channel.